Imagine spending $1.2 million on a luxury penthouse high above Dubai's skyline. Floor-to-ceiling glass, private elevators, a view of the most photographed city in the Middle East. You wire the money, sign the paperwork, and fly in, expecting the dream of a lifetime. But when you arrive, something feels wrong. The tower is silent. Entire floors are empty. Across the street, more skyscrapers stand dark at night, with barely a handful of lights glowing through hundreds of apartments. The lobby echoes. No residents. No movement. Just empty glass towers rising out of the desert like abandoned monuments. How did one of the richest and fastest-growing cities on Earth start looking like a ghost city? And, more importantly, is Dubai the warning sign for something much bigger happening across the global economy? Because what's happening here isn't just about real estate. It's about debt, speculation, geopolitics, and the dangerous illusion that prices can rise forever. Dubai wasn't always a city of supercars and skyscrapers. In the early 1900s, it was little more than a fishing and pearl diving settlement. Then, the global pearl market collapsed after Japan introduced cultured pearls in the 1930s. Many Gulf economies struggled, but Dubai's rulers made a bold decision. Instead of depending on one industry, they turned Dubai into a trading hub. When oil was discovered in 1966, Dubai realized something important very early. Its oil reserves were tiny compared to neighboring Abu Dhabi. So instead of relying purely on oil wealth, it used that money to build ports, airports, airlines, and giant infrastructure projects designed to attract the world. And that strategy worked unbelievably well. Dubai became obsessed with building the biggest everything. The tallest tower on Earth, Burj Khalifa. Massive artificial islands like Palm Jumeirah. One of the world's largest shopping malls. Luxury hotels everywhere. Between 2006 and 2010, reports claimed around 25% of all construction cranes on Earth were operating in Dubai. Think about that for a second. One small city in the desert became the center of a global construction frenzy. But underneath the glamour was a very fragile system. Dubai attracted investors using one simple promise: zero taxes, no personal income tax, almost no corporate taxes for years. Foreigners could fully own businesses inside special economic zones. Money flooded in from everywhere. Then came the real estate boom. In 2002, Dubai introduced freehold ownership laws allowing foreigners to buy property. Suddenly, investors from Russia, India, Europe, China, and the Middle East all rushed into the market. Apartments weren't being bought as homes anymore. They became financial assets. People started flipping off-plan properties before construction even began. Someone would reserve an apartment using a small deposit, then sell the contract for profit before the building was completed. Sometimes a single apartment changed hands 4 or 5 times before anyone even poured the foundation. And as long as prices kept rising, everyone believed the system was genius. But here's the problem. Dubai kept building faster than real demand could grow. Tens of thousands of apartments were delivered every year. Luxury towers, waterfront villas, massive mixed-use developments. Yet many of the buyers never planned to live there. Some investors only wanted a safe place to park money. Others bought properties and left them empty to preserve resale value. In many neighborhoods, entire towers began filling with hollow units apartments, owned by investors but never occupied. At the same time, ordinary workers and middle-class residents struggled with rising living costs. Dubai focused heavily on luxury construction, while affordable housing lagged behind. The result became increasingly visible. Shiny buildings on the outside, but fewer real communities inside. In areas like Jumeirah Village Circle and parts of Business Bay, some newly completed towers reportedly struggled with low occupancy despite developers claiming projects were sold out. And then global conditions started changing. Remote work reduced demand for expensive office space. Rising interest rates made borrowing more expensive. Layoffs in tech and finance pushed expatriates to leave the city. Dubai depends heavily on foreign workers and expatriates. who make up most of the population. When those workers leave, rental demand weakens very quickly. Suddenly, landlords faced a painful reality. They didn't want to lower rents because many had mortgages and loans to pay. But tenants could no longer afford the prices. So towers stayed partially empty, while debt pressure kept rising. Then came another major risk: geopolitical tension. Dubai sits dangerously close to the Strait of Hormuz, one of the world's most important oil shipping routes. It's also geographically close to Iran. When tensions escalated across the Middle East in recent years, investors began questioning something they had ignored for decades. What happens to luxury real estate when regional conflict becomes a real possibility? Stocks can be sold instantly during a crisis. Real estate cannot. If fear spreads through the market, a $2 million apartment can suddenly become extremely difficult to sell. Insurance costs rise. International banks become cautious. Foreign capital slows down. And because Dubai's economy depends heavily on constant capital inflows, even a temporary slowdown creates pressure across the system. At the same time, global financial regulations have started changing. For years, Dubai attracted enormous amounts of foreign money, partly because of privacy and limited oversight. But international anti-money laundering regulations became much stricter. Authorities increased scrutiny on cash transactions, beneficial ownership records, and international transfers. That changed the game completely. Money that once moved easily into Dubai property markets suddenly faced more checks and restrictions. Investors who valued anonymity became less comfortable. Banks also became more careful about politically exposed funds and sanctioned individuals. Even major developers began adjusting their strategies. Some started offering extremely long payment plans stretching years after handover. Others pushed aggressive incentives to maintain sales momentum. When giant developers start making unusually generous deals, it often signals weakening demand beneath the surface. But perhaps the biggest hidden issue is sustainability itself. Dubai survives in one of the harshest climates on Earth. The city depends heavily on desalination plants for fresh water. Air conditioning runs almost non-stop during extreme summer heat. Maintaining giant glass skyscrapers in a desert environment is incredibly expensive. As ESG investing becomes more important globally, many pension funds and institutional investors have become less enthusiastic about heavily carbon-intensive projects. That matters because institutional capital plays a major role in supporting large real estate markets worldwide. And then came another symbolic shift. Dubai built its reputation partly on being tax-free. But in 2023, the UAE introduced a 9% corporate tax. Compared to Europe or America, that's still low. But psychologically, it shattered the idea that Dubai would always remain a completely tax-free paradise. Investors started asking uncomfortable questions. If taxes can rise once, could they rise again? If global minimum tax frameworks expand, how much of Dubai's competitive advantage disappears? Now, to be clear, this doesn't mean Dubai is collapsing tomorrow. The city still has enormous strengths. Tourism remains strong. Infrastructure is world-class. Emirates Airline connects the globe. Millions of people still see Dubai as a land of opportunity, but the easy money era may be ending. Dubai's biggest challenge is that it built an economy heavily dependent on confidence. Confidence that prices will keep rising. Confidence that foreign money will keep flowing. Confidence that geopolitical tensions will never seriously disrupt the region. And once confidence starts cracking, everything becomes more fragile. What makes Dubai fascinating is that it reflects a much larger global problem. Around the world, many cities have become dependent on speculative real estate instead of productive economic growth. Asset prices rise faster than wages. Investors treat housing like stocks. Luxury towers multiply while ordinary people struggle with affordability. Dubai simply pushed that model further than almost anyone else. The city may survive and adapt like it always has. But the era of limitless optimism and unstoppable growth appears to be fading. And if one of the world's most ambitious real estate markets can start showing cracks, investors everywhere should probably pay attention. Because sometimes the scariest financial bubbles are the ones that still look beautiful from the outside.